Welcome to Blaxe Academy, Technical Analysis. In this video, we will examine using one of the simple tools, perhaps the simplest tool in our technical analysis toolbox, Trendlines. A trend line is simply a line, but it's one of the fundamental tools listed in just about every book on technical analysis that exists, at least that I've ever read or encountered. And the reason is that it's an easy, straightforward, and to some degree it has good effectiveness in helping technical analysts, whether they're pro or amateur, to determine the current direction in market prices, or the trend. And this is important because identifying the trend, or the trend direction, is a first good step in making a good trade. It's a long way off from actually initiating a trade in a market, but without being able to correctly identify the trend, you're probably not going to make a good decision. The good part about trend lines is that, again, I can't stress enough how simple they are. It's just a line that gives you a visual cue of where the market is going. And to create a trend line, all you have to do is connect the dots. That is, connecting 2 points on a price chart. And after those 2 points, the next point in theory and the subsequent points that are along this sloping line created by the first 2 points, called the set points, creates opportunities to get into a market, hopefully for profit. Trend lines come in 2 forms: an uptrend, because there's an uptrend in the market, and a downtrend. The difference is pretty much just the rules, and they, like the trend line, are simple. In an uptrend, a trend line must always be under the rising prices. As you can see here to the right, the trend line must always be underneath the market. We'll show some examples on some charts soon enough. And the first set point has to always be lower than the second one, because as prices are rising, the trend line's slope should be positive, and each subsequent line should be higher than the next. In this situation, the trade idea is really simple. When you get your first 2 touches, on the next touch, consider going long. That means buying. When the trend line is touched, it doesn't get much simpler than that. 1, 2, 3. And if you've been with us for a while, you know that at Blaxe Academy, we stress risk management and protection. So even the strategy here is to set your stop loss far enough away underneath the trend line such that as the price breaks lower, you have pretty good chances that the market has turned and your trade is no longer valid. The downtrend is about the same, with the exception that here you draw your trend line above. If you haven't noticed, trend lines fall right in line with another technical concept, which is support and resistance. In the uptrend, of course, the trend line is below, or it's supporting the prices as it rises higher. And here in the downtrend, the trend line is above the prices, which buys into it being a form of resistance. But again, the first set point here is now higher than the second set point. The reason is because the market is moving lower. And at that third or subsequent point that touches the trend line, you should consider going short here. And short means selling the market. Use a stop loss here that has to now be far enough above the market such that if the prices break higher, you understand now that the trend has changed and you should be out of your trade. It's really just that simple. So now we're going to take a look at a few markets and see if we can find some trend lines that do what we need and see maybe some that don't. And there's a couple of other tricks that I like to use to help better define the trading aspect of it. For analysts, for people who just look at the market and try to predict what's going on, trend lines are very useful. They don't have to think too much about what's going to happen in the future, and they don't often have a lot of skin in the game, if any, if they're going to place trades, because they're not going to place trades. They're just analyzing the markets. But since Blaxe Academy is made for traders and investors, we're going to show you some trading tricks that will help even with making simple trend lines more effective. Now here we are in TradingView, tradingview.com. I'm going to look first at, let's say, an equity market. Let's go with AMD, Advanced Micro Devices, tech stock. We're going to look at a daily chart. This is typically a default look for a lot of traders. For now, I'm going to hide the volume because it does not give us a lot of information. But as you can see on screen for the view that I have, which is from our current at the beginning of the year 2022 all the way back to 2018, we can see that AMD is in an uptrend. So in theory, we should be able to pick 2 points and establish a trend line somewhere that, with the benefit of hindsight, we can see where it would have been used to help trading. Right off the bat, I will tell you that at this daily level, one of the things you should consider is the fact that each candlestick shown here, each block of data, is 1 day in time. So as I zoom in and start picking off these points, you have to understand that there might be a lot of time in between when the trend line actually touches initially, and the second point for the set points, and then the third and the next subsequent levels. What I mean is this: if you're trading off of daily trend lines, you're on a really long time frame, and your expectation should be that it's going to take some time for these things to hit. Now, if that's not in your trading plan, for there to be months and sometimes even years between the points in your analysis, you may want to pick another time frame. But for now, it's a good place to get started. As usual, I usually recommend looking for places like a significant high or low in the market. And for the most part, I could have picked where we started, which is fine. And I'm going to show you, let's say if we start at this point, which is back in April of 2018, I'm now going to zoom in and take a look, maybe a deeper look into what that spot was. And again, we can see the whole point is not necessarily predictive with trend lines like it is for some of our other tools. And you know, I really don't like the word predictive anyway. But for a trend line, what you're really trying to do is go off the notion that once a trend is in place, it tends to stay in place. It's one of those trading adages that it's good to get the mindset for new traders to get adjusted to. But as you start to develop, you'll quickly see that it is much more nuanced than just the trend is your friend. In a lot of cases, the trend as a new trader is not your friend. But for technical analysis, being able to identify the trend for, any time period like we're doing now is pretty much beneficial. So from this point that we have here, I'm going to make sure that I highlight it to make sure everyone knows what we're talking about. I'm going to go off the low candle here. Now, one thing that I like to talk about with drawing trend lines, and we will speed this up a bit, but I like to be clear. You need to have a good bit of time in between your 2 points. And the reason is because if they're too close together, they're pretty much almost at the same point in time. So you're not really gathering the 2 points needed to make a trend line. And in theory, the more the merrier. The more touches you have on a trend line, the stronger it's supposed to be. But the caveat here is that you do need a long enough time, a significant enough period of time to make the trend line itself meaningful. So if I were to say, look at this point and draw my trend line from it as well, to be honest, this is too close. This is far too close. And there's a ton of other spots that I may be able to draw. We'll just start with a few. And as I draw, you'll start to see what I mean. If I draw from here, that's pretty much the same spot. But if I adjusted it up a little, well, I have a touch here. Now, I have a touch at this spot. And again, we have glorious benefit of hindsight. You can see that there was another point right here that touches it exactly. And there would, in theory, be a pretty good buying opportunity after this point. You can see that AMD advanced a great deal from this point. More than doubled in price, to be honest. Sure. Now, if you draw your trend lines correctly, they're supposed to hold, which means they should be significant and hold the trend for a period of time. But there's a lot of reasons why they would not work in certain markets, especially if you're looking at a market like AMD, which is a stock, but it's a more volatile stock, which means it moves up and down a lot more than some of the other ones. So in a volatile market, whether you're talking about stocks or bonds or Forex or crypto, what have you, futures, when it's more volatile, the trend lines don't tend to hold as well. And this is why, in my opinion, and in my practice, I don't use trend lines incredibly much. But if this is your first time looking at markets, please make sure that you're able to discern between where to put your first lines on a trend line, because it's just that important. Now, as we go along, you can kind of see a very interesting thing, and I'm going to come back to this concept, is that instead of supporting the market here, you can see that the market gapped through. And part of the reason why it gapped through is because of this E here. This E at the bottom of the screen denotes an earning report, and it was for a certain period of time with showing the earnings for this company. And the surprise was to the downside, not that that matters too much, but the prices for AMD actually gapped below our trend line. Trend lines break, but when they break substantially, one key concept, if you've done it right, that works as we were talking about support and resistance, is that trend lines, even the ones that are sort of shoddy like this one, can sometimes flip their role. Instead of becoming a support in an uptrend, these now become points of resistance as the market has clearly turned lower. Now, is this a trend change for AMD? Probably not. But these are ways that you can use a simple line, a trend line, to discern information about the market. You can't tell incredibly much, but if you see the price gap through your trend line and then come back up to it but not go above it, you can deduce that the trend line now has become or has changed roles. Instead of one in an uptrend and support, it is now a point of resistance. And there's not a lot of trading opportunity here per se here, but at the second touch, you can see that the movement's down. And that might have been an opportunity for a short-lived one for a trader to actually get short the market. Now, if I were to look at other spots, and this brings me back to my original point that I didn't think that right in here was sufficient enough time. If I were to pick another point now that I'm looking at AMD for a trend line, I may pick here. This point has a lot of time between it. It looks like, again, it's a point that the market has not gone lower and the price stays above it. Sure, for analysis purposes, this is pretty much the definition of a trend line. I have my point here, my first set point, which is lower than the second one. The second one is higher than the first one. The problem is we're probably going to run out of market. Yeah, the market does not touch this spot anymore. Interestingly enough, you can see that our first line provided even more points of resistance to a certain extent before it was broken. And even again, sort of swapped its role as we moved once again. And this is how trend lines work. If you're really looking at this picture objectively, though, you can say that, it had very limited use. And as I suspected, the one that I drew that was, again, it followed the rules. It didn't offer us anything in terms of trading. For an analyst that was to say that, hey, AMD is going to be up and it's a buying opportunity for the next whatever investment time frame, that's great. But as a trader, there's a long period of time. There's years in between here where we didn't get a good opportunity to buy into this AMD uptrend at a discount, which is really what you're trying to do anytime you are trying to have a trading exercise. You're either going to buy into as an opportunity at a discount or sometimes at a premium, depending on your strategy. But here, when you're using trend lines as support in an uptrend, you're really trying to buy at a discount. So this is sort of my next trick, and I'm going to see if it works here in AMD, is oftentimes when I'm looking at a significant low or a high in the market, if I'm drawing a downtrend, but in an uptrend, I typically don't start my initial point, my initial set point at the very low. I pick the next low or a low that happens to the right of this initial low point where you can clearly see the market's going in an uptrend. But often I would start, instead of starting here, I would try my best, if I can get this to move, to start instead here. We'll see how well this works in AMD. And I'll explain the simple reason why I like to start at secondary spots. And it's really simple. Once the market has established a low point and has moved up in a trend and has corrected or retraced down to another point, that second point is a buying opportunity that has already been established by whomever is trading the market. So again, as I start to take some of our artwork away and focus here, as I draw a trend line from this point, you can see that I've drawn something that is slightly more significant than I did at first. And as I start to correct this a little bit more, you can start to see that, once again, instead of just being by the textbook definition of what a trend line is with the 2 points, I now have my first set point here and then my second one, but I have achieved a buying opportunity here. And if you're studying enough, you can see that there's also a minor buying opportunity here. And it doesn't go as very far, but if you were targeting maybe just the highs, if you knew more about how price action typically works back and forth, you can see that the opportunity here might have been just to take the market back to the highs. And there are two very short term, if you will, trading opportunities. The first one at the end of May, and it touches this high point in the second week of June. And then it moves back to touch the trend line again and moves back up to the same place before it breaks down and starts doing something else. This is a very simple way of using trend lines, and I didn't have to change much. The only thing I did differently this time was, instead of picking the absolute low, I picked the second point after it had moved up, established itself off the low, and started to push higher again. It didn't produce a ton of buying opportunities, but it produced more than we had in the first time. And oftentimes you're going to have to make adjustments. And you have to be careful with this, again, because depending on your time frame, you may not get a lot of opportunities. But you may be asking yourself, so, well, if I'm on a chart and I don't see a lot of opportunities, or it does not appear to support this idea that trend lines support the prices, one of the things you can do is actually go down in your time scale, your time interval. I'm at a daily chart. I could go down to a 4-hour chart, for example, and the nature of the trading will change significantly. As you can see, just where I was, starting from this low point here, we can actually see that there were several buying opportunities just in here. And there's other opportunities too, depending on where I decide to put the trend lines. To the downside, the same sort of rule applies. If I was to look at this spot, market has moved up and it's starting to move lower. Maybe you get a sense that it's done, and since you're a trader, you're not afraid to not just buy the dip, but you're also able to fade the highs and attack some of these downtrending markets, which is a good thing. The rule of not drawing my first trend line here is very much, probably even more evident as I look at these this downtrading period here, than it was in the uptrend. And let me show a little bit more. If I was just to connect these 2 points, my first one and my second one, but maybe my second one here is not lower as the rule says that it should be, this isn't a valid starting point. So I know it's a high point. It should be higher than the next one, but I don't think it actually is higher. So instead of starting at the red arrow, we can start at this one instead. And by the way, I haven't said this yet, but in TradingView, the very first tool under the cursor position is the trend line. And you can actually, there's a hotkey here for it, Alt plus T, and it'll bring it out. A lot of the other tools that I use are just from convenience, but as you get started, very first tool is trend line. Again, it's very simple to use. Connect. And here, as I connect to the second line here, sort of the same problem that we're having before, is that, sure, it provided some resistance as the market, but you can see that there's a slight breach here, a slight to considerable breach depending on where you would put your stop loss here, right? If you were putting your stop loss above the last peak in the market, you're going to be fine. But if you had a stop loss that was more acute and you were trying to enter the market as it touched this trend line, you might be in a little bit of trouble. You would have to have your stop up at least above here to take advantage of this situation here. And the next problem, of course, which is not necessarily a problem, again, the trends in these markets change often, is that if you were to try to use this same trend line and make another trade, you're going to run into problems. However, I will remind you that it's one thing to take the trend line at face value and say, hey, it's supposed to work when the market touches this line. One thing you should know is that the market does what it wants, when it wants, and we don't decide. We just react and follow suit by looking at the signals. And here, the difference between taking a short opportunity here versus one here and the last one is simple. It's the candlestick patterns. The candlestick patterns at each one of these is much more permissive than it is here, because if you notice, the candles here going into this trend line are green and they remain green. Green candles simply go up. So there's no logic, or at least no sound decision making in selling into green candles, even though you have a trend line. Again, the markets are not that simple. They'll be glad to take your money, though, if you're not paying attention. But the difference here is that the candlesticks in this area, even though they went higher, are showing more signs of market exhaustion and a much more likely chance of the market going lower in the future here. And especially here, this was actually a pretty good sell signal that coincided with the trend line. So this one was good. This last one was not. But again, trend lines are very basic. I've shown you how to do a basic trade setup here. And again, practice on some other charts. But for now, I'm going to switch markets and see what we can find, let's say, in Bitcoin. Bitcoin is this 4-hour scale. Probably a lot of the same. And a lot of market technicians are going to want to use trend lines just to get started. But like I said, you're probably not going to rely on them. And this is especially the case when you get into markets that are volatile. Bitcoin is the epitome of a volatile market, at least in this stage of its existence. But if you study the markets, study more than one time frame, more than one time interval, you still can find opportunities to trade, even in the most volatile markets. For example, as I'm sitting looking here, very simple time frame, and I'm going to take the volume off to make sure that we can see all of the price action that we need to see. Is you can take this from a couple different ways. Here, which is the first low point after this move down, but as you can see on the screen, there are other low points here as well. I probably can connect these. Let's see how well that works. I can probably connect these. Yeah, that's not so bad. That's not so bad. I can't quite. And again, adjustment is part of the name of the game, and the unfortunate part is you're adjusting without hindsight when you're actually doing it. But when you're practicing, see if you can make your adjustments in time. So I have my 2 points, and we can say that we almost had an entry here. We almost had a good entry here. Maybe if you were observing and it got close, you could say, well, that's close enough and I can get in and make some money here. But there was a miss there, and you can see that Bitcoin takes up and goes considerably away, probably never to come back to this level, or at least, never come back in this time period. So again, I can't stress enough, if you see a low, move to the next low to the right of it, and oftentimes you'll have slightly better performance out of your trend lines. Slightly. And I say that here. Yeah. So if I draw this one slightly better, you almost get, and this feels almost like a forced move here. So I'll move to the next one, and you can see there's one opportunity here. But for the most part, follows the price up. You can do the same thing. In volatile markets, I'm going to tell you, you're not going to get a lot of opportunities per se once you identify your trends, because the trends do change. And this is something that frustrates traders when they're first hearing these adages like the trend is your friend and stay with the trend. But in certain markets, the trend changes, or the trend adjusts. The momentum of the market, how fast the market is moving, also adjusts, and it's hard to keep up with. So again, the mistake is made when I try to draw the trend line here. I'm not going to get good opportunities. However, if I adjust slightly, ever so slightly, and move over just a bit, it helps ever so much. Now, if you know much about chart patterns, you can see that this is starting to move into something that's a triangle, which again ends up being a breakout. And trend lines are really good for confirming that the price is breaking out. Because again, if this large green candle wasn't an indication enough, the fact that you've had 3 touches here and a decent trade down into these lows, only to have first a warning and then a full breach of it where the market actually closed above the trend line. If anything, this gives you an idea that the market's going higher. You should be out and possibly be in the market long instead of short here. But again, if you start to have problems, at your current time frame, especially if it's these big time frames, I went down from a daily time frame to a 4-hour, but with something like Bitcoin, you can actually go to even smaller time frames, 1 hour, and you might start to find more opportunities. Here we are, not that far from where we were, drawing the lines. You can see my other lines up there. Starting from this point, maybe some opportunities. Here's a touch and a little bit of an adjustment. Like I said, trend lines are more art than science. But here you have about, after the first 2 set points, I'm going to change the color of this just to highlight it being on a different time frame. After the 2 set points, you have 2 other potential spots to move lower in the market, make money moving lower in the market. That last one I'm not so excited about, however, but again, I only see that in hindsight. You don't exactly know. There's some opportunity in there, though. It's really short term, but it just about touches the trend line here, and you can see that it moves lower, but it doesn't stay there very long. And though I'm showing downtrends, because we're at the end here, the same thing applies on a shorter time frame. This works in the uptrends as well. Though, admittedly, with Bitcoin, again, being as volatile as it is, you're still going to have a hard time buying the dips, if you will, using a trend line analysis. I can show maybe one from this point. And though, again, it's a low, the next lowest low is going to be here, and there may be an opportunity here. Ever so slight, you get one more opportunity right in here to buy the dip. But if you were looking for a very simple technique, it doesn't get much better than this. Now, I would like to point out again that once the trend line breaks, right, it often highlights opportunities to go in the opposite direction. As we finish this video, we're going to have another video that actually combines some of the things that we've been talking about. What happens instead of trying to find opportunities when this very simple, maybe oversimplistic version, we can look to the other side and combine what we know with trend lines and then breaking. What happens? How do I take advantage of the market when a trend line breaks? Because as you can see here, oftentimes the moves, once trend lines are breached, and this is a resistance point, no matter what tool or analysis you look at. I can show you a few others. The move here was sudden and swift, and it's going to be a real change of direction in the market. You can take advantage of these if you know what to look for. I'll show you in the next video how to do this with trend lines. But before we go, I'll take a look at one last market. And here, bond markets. Not a lot of traders think about bond markets, but again, it's as viable as stocks or crypto or anything else to make money, especially if you know what you're doing. We have a classic example here of exactly what I'm talking about, you can set your trend lines up perfectly here and then have another one here. But as you can see here, as we move back into it, it's supposed to be a support, but the market is not interested at all. The market has actually changed direction. You can see that because we actually have a high here, and the subsequent high in the market is actually significantly lower. And I'm just changing these to sort of give some color dimensions to, again, the uptrend here never stood a chance. This was not a strong trend, but there's opportunities to buy, to actually play into this to make a profit instead of just buying when the trend line hits. To the downside though, and we'll stop here, going from not this high, but this one instead, and just simply connecting, we'll find results in this bond market that a lot of people don't trade, and I don't know why. Bond markets are fun to trade. They move at paces that often other traders struggle with. The faster pace things, you can actually trade bonds just as well, and they move at sort of a middle pace depending on what bond you're trading and, of course, what time frame and motive. But here's a couple of opportunities here, one of them, the last one, being very considerable as we touch the trend line. So what we learned here is that trend lines are a really easy tool to get started. It helps you to understand price action, and it's a really good beginning point. The problem is that if you want to be competitive at trading, you're either going to need to take some time to adjust and learn how to use the nuances of trend lines to your advantage. And there's some traders out there that do excellent jobs at doing so. Or you're going to have to integrate them with other tools because they're not always as accurate as you need them to be. And you may need other tools to help make adjustments to what they say. But remember, follow the rules. In the uptrend, the trend line must be under the price. In the downtrend, the trend line must be over the price. And if you don't see what you like, change your time frame. And if you still don't see what you like, try other markets. That's why we show stocks, cryptocurrencies, and bonds here to show you that there's a variety of markets in which your tools may work. And as a new trader, it is very important to try out other markets, to test out, to see where you may be comfortable, because it may be well beyond what you're looking for, because what you're looking for when you start is often limited. We hope you enjoyed this video. More importantly, we hope that you learned something, and look for part 2, because we're going to combine these trend lines with some other tools to show you a trading strategy that is not as simple as this, but is more effective. See you then.